Many pensioners are struggling to make their money stretch further, yet there is one benefit that thousands of eligible people never claim. And the shocking part is that missing out on it could mean losing access to thousands of pounds every year. If you receive the state pension, live on a modest income, or worry about rising bills, this information could be extremely important. Many people assume they would not qualify, so they never even check. But what most pensioners are not being told is that this single benefit can unlock a whole range of extra help, and the total value can be far higher than most people imagine. Here is what you need to know. One of the biggest mistakes pensioners make is believing that pension credit is only for people with no money at all. That assumption causes many eligible people to miss out. They hear the word credit and think it does not apply to them, or they believe they earn too much from their pension to qualify. This is where things become important. Pension credit is designed to top up income for older people on lower incomes. Many pensioners who own their home, have some savings, or receive a state pension still qualify. Yet thousands never submit an application because they assume they will be rejected. Imagine a pensioner receiving the state pension and a small private pension. They pay their bills, buy groceries, and manage carefully. They do not consider themselves poor. Because of that, they never investigate pension. Meanwhile, another person with very similar circumstances applies and receives additional support worth thousands of pounds each year. The consequence is simple. Two people with almost identical situations can end up with dramatically different levels of support simply because one applied and the other did not. The important thing is not to assume. Eligibility is often much broader than people expect. Another misconception involves savings. Many people believe that having money in the bank automatically disqualifies them. As soon as they hear about pension credit, they think, I have savings, so there is no point applying. Many people don't realize that having savings does not necessarily prevent a successful claim. This misunderstanding stops countless pensioners from checking their entitlement. Some have spent years worrying about money while support was potentially available. Think about someone who spent decades putting money aside for emergencies. They have a modest savings account. Because they were responsible and careful, they assume they cannot receive any assistance. As a result, they never apply. The possible consequence is losing out on support that could make everyday life much easier. What viewers should do is remember that assumptions can be expensive. The only way to know for certain is to check your circumstances through the official process rather than ruling yourself out before you even begin. Now here is where the story becomes even more interesting. Many people focus only on the direct pension credit payment. They hear a figure and decide whether it sounds worthwhile. But that is not always where the biggest financial benefit comes from. Pension credit is often described as a gateway benefit, and this is what most pensioners are not being told. The real value can extend far beyond the weekly payment itself. Once someone qualifies, they may become eligible for additional forms of support that can significantly increase the overall value of their claim. For example, help with council tax can make a noticeable difference to household finances. Many pensioners see council tax bills rise year after year. For those living on fixed incomes, every increase creates additional pressure. If pension credit opens the door to council tax support, the savings can be substantial. Imagine receiving help that reduces one of your largest recurring bills. That money remains in your pocket every month. The consequence of not claiming could mean paying far more than necessary for years. That is why checking entitlement matters so much. Then there is help with health-related costs. Many people don't realize that pension credit can be linked to assistance with things such as dental treatment and other health expenses. As costs continue rising, even routine appointments can create financial stress. A pensioner might postpone treatment because they worry about the expense. They tell themselves they will deal with it later. But later becomes months, and months become. The possible consequence is not only financial strain, but also unnecessary discomfort. What happens next may surprise some people. The support available can sometimes help remove those barriers altogether. That is why understanding the full picture is so important. Another area where pensioners may miss valuable help involves heating and energy costs. Energy bills remain a major concern for many households. Some older people reduce heating usage during colder periods simply to save money. They wear extra layers indoors, limit heating hours, and constantly monitor spending. Yet certain forms of assistance linked to pension credit can provide valuable support with energy-related costs. This could affect more people. A pensioner who qualifies but never applies may end up spending years struggling with heating bills that could have been partially offset through additional support. The important thing is that every pound matters when living on a fixed income. A few pounds saved here and there quickly add up over an entire year, and when several support schemes become available together, the combined value can become significant. Let's talk about another common mistake. Many pensioners believe that because they own their home, they will not qualify. This assumption is incredibly common. People often think benefits are only for tenants or those with no assets. But home ownership alone does not automatically mean someone cannot receive pension credit. As a result, thousands of homeowners never investigate. Imagine living in a house purchased decades ago. Property values may have increased dramatically over the years, but your actual income remains modest. You may be asset-rich on paper while still struggling with everyday expenses. The consequence is that homeowners who automatically dismiss themselves may miss support that could help improve their financial situation. Once again, the key message is simple. Do not assume. Check. Another hidden issue involves pride. Many pensioners spent their entire lives working hard, paying taxes, and supporting their families. Because of that, they sometimes feel uncomfortable applying for assistance. They tell themselves someone else needs it more. Or they think asking for help means they have failed. But pension credit exists specifically to support eligible pensioners. If you qualify, it is there for you. Many people don't realize how often pride prevents claims that could make a real difference. A pensioner may spend years cutting back on essentials, skipping outings, reducing food budgets, and worrying about every bill. Meanwhile, support designed for their circumstances remains unclaimed. The consequence is unnecessary hardship. What viewers should remember is that checking entitlement is not about taking something that belongs to someone else. It is about ensuring you receive the support available under the rules. Now, here is another little known fact. Some people believe that if they were not eligible in the past, they will never be eligible in the future. That is not necessarily true. Circumstances change, income changes, expenses change, benefits change. Thresholds can change. A pensioner who checked years ago and did not qualify may find their situation is different today. This is why regular checks can be so important. Many people never revisit the issue after one unsuccessful attempt. Years pass. Their financial circumstances evolve, yet they continue assuming nothing has changed. The consequence is potentially missing support simply because they never checked again. What most pensioners are not being told is that old assumptions can become expensive. Another warning involves misinformation from friends and neighbours. People often rely on stories they hear from others. Someone says they were rejected. Someone else claims nobody qualifies anymore. Another person insists that savings automatically disqualify everyone. The problem is that every case is different. Advice based on another person's circumstances may be completely wrong for yours. Imagine making a decision that costs you thousands of pounds because of something you heard second-hand. Unfortunately, that happens more often than many people realize. The important thing is to rely on accurate information and official assessments rather than rumors. Now let's consider the bigger picture. Suppose a pensioner receives additional pension credit support. Then they gain access to council tax help. Then they receive assistance related to healthcare costs. Then they qualify for support connected to energy expenses. Then they benefit from other concessions and reductions. Suddenly, the total value is no longer just the direct payment. It becomes a package of support that may be worth thousands of pounds annually. This is where the headline figure begins to make sense. Many people focus on one payment while overlooking the entire network of assistance connected to it. The consequence is underestimating the true value of making a claim. What happens next may surprise some people. Even small weekly amounts can produce large annual benefits when combined with linked. That is why pension credit is often described as one of the most overlooked forms of assistance available to pensioners. Let's also address another concern. Some people worry that applying will be complicated. They imagine endless paperwork, confusing forms, and a stressful process. That fear alone stops some pensioners from investigating further. While every application involves providing information, many people find the process more manageable than they expected. The bigger risk is never applying at all. Think about the difference between spending some time checking eligibility and potentially gaining access to valuable support versus ignoring the opportunity entirely. One path creates possibility. The other guarantees nothing changes. Many people don't realize that doing nothing can be the most expensive decision. Another issue is delay. A person hears about pension credit and plans to look into it later. Later becomes next week. Next week becomes next month. Then another bill arrives. Another year passes. Nothing happens. The consequence is that valuable support remains unclaimed. This is where things become important. Information only helps if action follows. Knowing about a potential benefit means very little if nobody checks whether they qualify. Many pensioners are surprised when they finally investigate and discover they were closer to eligibility than they imagined. That is why delaying can be costly. Now consider the emotional impact. Financial pressure affects more than bank accounts. It affects confidence. It affects peace of mind. It affects sleep. When bills continue rising and income remains fixed, stress can become a constant. Additional support may not solve every problem, but it can reduce pressure. It can create breathing room. It can help cover essentials. It can provide reassurance during uncertain times. That is why this topic matters so much. We are not simply talking about numbers. We are talking about quality of life. We are talking about helping pensioners keep more financial stability. We are talking about support that many eligible people never receive because of misunderstandings. Another common misconception is that if a weekly amount seems small, it is not worth pursuing. This can be a costly mistake. A modest weekly increase can become hundreds of pounds across a year. Add linked benefits and concessions, and the total value can become much larger. What most pensioners are not being told is that the true financial impact often extends well beyond the headline figure. This is why looking at the complete package is essential. Not just one payment, not just one bill, the entire picture. Many people who finally claim say their biggest regret is not checking sooner. Years of missed opportunities cannot always be recovered. That is why awareness is so important. Before we finish, there is one final warning. Never assume you know the rules based on outdated information. Never assume you earn too much without checking. Never assume savings automatically disqualify you. Never assume home ownership means you are excluded. Never assume support is only for someone else. Those assumptions are exactly why so many eligible pensioners miss out. And when support remains unclaimed, household budgets become tighter than they need to be. The important thing is to stay informed and remain open to possibilities. A simple eligibility check could reveal support you never expected. And because pension credit can unlock additional forms of assistance, the overall value may be far greater than many people imagine. So remember the key points. Pension credit is one of the most overlooked benefits available to pensioners on lower incomes. Many eligible people never claim because they wrongly assume they do not qualify. Savings do not automatically rule you out. Home ownership does not automatically rule you out. Past ineligibility does not automatically mean current ineligibility. And perhaps most importantly, pension credit can act as a gateway to other forms of support, including help with council tax, healthcare-related costs, heating assistance, and additional concessions that may significantly increase the overall financial value. If you or someone you know receives a state pension and lives on a modest income, it may be worth checking whether support is available. Share this information with family members, friends, neighbours, and other pensioners who might benefit from hearing it. Many people don't realise they could be missing valuable support until someone points them in the right direction. And in times when every pound matters, staying informed can make a real difference. The more you know, the better you can protect your finances, safeguard your benefits, and strengthen your financial future.